Hi, are you someone who is finding it difficult to manage your portfolio of stocks? The biggest problem today is that people have invested in stocks in different points of time, and now they find it difficult to manage. Sometimes we find that the stock is in profit, sometimes it is loss, sometimes you just don't understand what should you do with a particular stock. So in this video, I'm going to tell you how you can manage your portfolio. Hi, this is Paresh Desai. I'm a chartered accountant. I've got 25 years experience in the financial field and 15 years experience in the field of coaching and training. I have trained thousands of people to understand how the stock markets work and how to not only make the money, but also maintain their portfolio. So let us see how you can maintain your portfolio. In your current situation, you could be having three phases which you are in right now. Okay. The first thing would be some of your stocks could be in profit, right? The second situation could be that some of your stocks are in loss. And the third would be that some of your stocks are just breaking even now. So by break even would be that your buying price and your market price is almost the same. So if your stocks are in profit, it would mean obviously that your buying price was lower and now the current market price is higher. If your stocks are in loss, it would mean your buying price was higher and now the current price is lower. And if you're breaking even, then it would mean that the current market price is just near your buying price. So let us see how you're going to react to, or how you're going to treat the three different situations or the stocks which are in the three different phases. Okay, so let us take the first situation where some of your stocks are in profit. If the stocks are in profit, then you can do two things. Number one, you should book your profits. Okay, if you find that they have come at a resistance, or if you think that now there is a trend reversal. Okay, so if there's a change in the reversal of the trend, or if there's like a trend line breakdown, then that is the time when you should be exiting from the trade by booking your profits. Second thing what you could do is, instead of exiting with a profit and you think that if the price might go even higher, then you can keep a trailing stop loss and continue with that stock, right? So trailing stop loss, let's say you invested, let's say at 100, now it has come to 150 and it has crossed that resistance of 150. So that 150 now becomes your trailing stop loss. If and only if it goes below 150, then you exit. Otherwise, you continue. So that was the situation number one, where you are in the profit in some of the stocks. The second situation is where the stocks are in loss. Okay, so some of your stocks could be in loss right now, where you find that your buying price is much higher than the current market price. So in that situation, what can you do? If you find that the losses are increasing, you bought something and then from there onwards the prices has been dropping, probably you made a mistake while buying, you bought it when already the trend was down, or you bought it at a peak. For whatever reasons, you are in loss in that particular stock. So if you find that the trend is down, it is the stock is giving you more and more losses, then it is better to cut your losses. Okay, it said as stitch in time saves nine. So same thing here, you should cut your losses well in time. For example, you bought it at 100, then you find that the stock has come to 90, it has come to 85, and it is breaking some major supports and it is still going down. Better to exit at 85 rather than waiting in the hope that someday it'll again go back to 100 and then cross beyond 100 and then you'll be in profits. So always take this step where you cut your losses, where your losses are less, would be much smaller than your probable profits, which I always advise that your reward to risk ratio has to be minimum 3:1. Okay, so if your stop loss is hit, then better to exit. But if let's say you're not exited and now the stock is in loss, then you decide that what is your next stop loss. So if the stop loss is hit, again you draw a line that yes, this is where I'm going to exit. Okay, so that is the second situation which you should be exiting in case your stock is in loss. The third situation which we have discussed is where your stocks are in a break-even situation. Okay, they're just breaking even now. So that break-even situation could be where you have bought earlier, right? And from there, the price went up, but again, it is coming down, right? So it is now at your buying price. Or it could be possible that you had bought at an earlier price, then it went down, and now it is at your buying price. So in both the situation, whether it had gone up and then now it's at your buying price, or it had gone down and now it is at your buying price, the situation remains the same, that you are still at your break-even point. Okay, so the market price is almost near your buying price. So in that case, you'll have to look out for two things. Number one, you identify what is the trend. So if you think that the trend is up, then no need to exit immediately. You'll find that probably the stock might go into profit in some time. So if that happens, then you put a trailing stop loss with every higher low. Okay, so if the trend is going up, then when the trend starts going up, you trail your stop loss. Okay. Now, if you find that the price was earlier high now and now it is coming to your buying price, in that situation, you have to draw a line again similar to what we had drawn in your stop loss case. Okay, so if the price had gone higher and now it is at your buying price, probably it is now in a downtrend. So in that case, your stop loss could be very close to where you had bought. And if you find that again, it is giving you something like a trend line breakdowns, or if it is giving you the prices are going below the support price, then better to exit with again a small stop loss. Remember, a stitch in time saves 9. So possibly this is the good time to exit with no profit, no loss, or very small losses, rather than again waiting in the hope that, okay, the prices might go up sometime and I'll be in profit. Okay, so these are the three situations. I'll repeat again the three situations. Either your stock is in profit, or it is in loss, or it is in a break-even point. Okay, so I've given you in detail like how you can take the decision on what to do with your stocks in these situations. Okay, so if you like this video, don't forget to subscribe to it and also comment below what you liked it. And if you would like to get more details about how to do technical analysis, fundamental analysis, you can join my free webinar, the link below which you'll find for the WhatsApp group. You can join the group, and you can join other Facebook page also. The links are given. You can meet me there live in the next webinar. Okay, so once again, Paresh Desai, thank you very much. I'll see you in the next video. Bye.